But at the end of the day, that was obviously a lot of that had
market's best friend to its biggest risk.
You know, it's interesting. It's easy to blame the president for this, and I'm not an apologist either way. I'm not going to play politics, but he's doing everything he said he was going to do 18 months ago. So if you're surprised by this, you've been living under some rock somewhere. So I don't think it's entirely his fault. And this started a week and a half, 2 weeks ago, by the way. I think it's got a lot to do with the Fed, a lot to do with the market that's probably gotten themselves off sides in terms of volatility, and a lot to do with the emerging markets and markets overseas that are sort of turning over to the wrong side. So, yeah, it's easy to blame him. Trade wars, I get it. That added fuel to the fire. But this was going on long before he opened his mouth today.
If you give him the credit, Dan, when the market goes straight up, then maybe he gets some of the blame when the market goes down, particularly as a policy comes out, at least an announcement of an expected policy change. That's controversial.
Yeah, I think let's just talk about this last few months of the way up until late January. You know, if that was a referendum on the president's, if that was a report card as they were calling it, well, then it looked pretty shiny, right, on January 26th. But at the end of the day, that was obviously a lot of that had to do with their tax plan that was put in place in late December. So when you think about tariffs, they're actually going to counterbalance a lot of the potential benefits for U.S. corporations that were actually getting the lion's share of that tax cut. So to me, it has the potential to cancel each other out. And so we're not going to know the effects of any tariffs anytime soon. But the trade war is the bigger issue. What does it mean for companies like Apple that use Chinese contract manufacturers to make 200 million iPhones a year? If we are going to get in that, it could really compress margins for companies like that if they have to move to other locales to make them.
It means a lot. And if you think about the market right now, I mean, there's a lot of other dynamics here that I think are also imposed by Washington, even though behind all this is a lot of great news on a corporate tax cut, et cetera. But as we've said, one of the other dynamics that's giving the market agita is that there's too much going on in terms of economic stimulus at a time when the market was getting going on its own. And now you've layered this on top. If you look at the bond market, the absurdity right now is we were concerned about too much growth, and now we're concerned about too much growth causing a reaction to too much growth, and actually bonds, if you look at the yield curve, it's starting to flatten. So yes, Washington right now can't get out of its own way, even though ultimately we've been set up for corporate profits in this country that are going to be extraordinary in 2018. They better be, because these guys are going at effective tax rates in the low 20%.
Jay Powell today on the Hill for his second day this time in front of the Senate got off on a bit of a different foot, sounded a little more dovish on inflation and the fact of where wages may be going. Is the biggest issue that the market has to deal with today, Karen, what's coming out of Washington, the White House, what some people describe as chaos. You have people leaving, now new reports of maybe General McMaster leaving.
I don't think that's what it is. I mean, this is an administration that has been in chaos since the very first week. Remember, they issued that immigration ban out of nowhere in a very chaotic way, and ever since then, it's been the same MO the entire time. So I think, yesterday a little bit of the sell-off at the end of the day, I think, was Hope Hicks, but by this morning, I think that wasn't relevant.
There was even Art Cashin on the floor today was talking about, this is my word, not his, the sort of haphazard nature at which this whole thing happened today. There's going to be an announcement. There's no announcement. There's a meeting. There's no meeting.
This, to me, I don't agree with Guy on that. This wasn't the cause. This was the cause. Powell had that was irrelevant by the time this came out of Trump's mouth.
Markets started rallying when Powell started talking.
So this is absolutely to blame. I think, though, I'm not sure that what he said will actually translate into actual policy. Remember, going back to the border adjustment tax, a very similar kind of tax as this, right? Taxing imports. That was quickly blown up. That would have been a disaster for the consumer. And I think you're seeing that kind of response to this. So I would be surprised if this policy that he put forth today actually ends up being what comes out of it.
You're suggesting what some others have suggested, too, as to whether today was a trial balloon that got popped by Mr. and Mrs. Market and some within the president's own party.
Well, Larry Kudlow is one of the staunchest supporters of the president. He came out steadfast against what was said today. And maybe I misspoke, but obviously today's sell-off had everything to do with those comments. But this isn't selling off at the all-time highs. This is selling off after 3 weeks of market turbulence that we've seen. So the seeds have been sown, I think, for this move. The president's comments sort of added fuel to that fire.
That's the important thing, because if the market wasn't doing what it's doing, we would not have had this reaction. Let's be clear about this. Monday night we're playing Everything is Wonderful, Sarah and Tegan. Guy, that's your favorite band, right?
Is that?
Everything is
No,
great.
you know who my favorite
awesome.
band is? Steve Leisman's is the band he plays in.
Friday night.
That's my favorite
Friday
band.
night at BB King's, by the way, our man is going to be playing. But bottom line is we have a dynamic here where if you didn't know better on Monday night, you heard this news Tuesday morning, market's not down 130 bips. All right,
Look,
it's just not.
We're a net importer of steel. We're a net user rather than a producer of some of these things.
Steel
That's why
prices are
autos.
$800 a ton.
I'm saying, throw up the autos, throw up the industrials. The areas that got hardest hit are the ones that are speaking out tonight, in large part against the policy. Do you need to rethink some of the sectors you would invest in tonight?
Well, I think if you look at autos and if you look at steel, like I own U.S. Steel not because I was expecting, Article 232 to get employed and then I was going to see these tariffs. I was betting on U.S. Steel because $800 a ton in hot rolled steel is actually very profitable. It's a free cash flow story. It's specialty steel products that these guys are very good in at a time when the economy is growing. And yeah, we might get infrastructure. Either way, if you look at auto production and if you look at the places that the steel companies make their money, things are very, very strong right now. You did not need this at a time that the market is overall got a lot of.
It's like you cut the corporate rate from 35 to 21, Dan, and then you're giving them another boost with tariffs on top of it.
Right, and so I just want to make one point. I brought up Apple before. I mean, literally, when you think about their ability to repatriate almost $200 billion at 10.5% or something like that, and then when you think about having a corporate tax rate of 21% from here on out, I mean, whatever adverse effect that they may have in a trade war would not be significant for some time to come. And then, so to me, I think a lot of this gets netted out. You were talking about the autos. GM was down almost 5%. Phil LeBeau had the executive from GM who sources the steel. He said, we source 90% of our steel from here in America. You know what I mean? So why is the stock down 5%? So this could present some near-term opportunities for a stock like GM that's, down 20%?
Yeah, and by the way, higher steel prices, which we have and which we might get, are going to hurt the auto companies. I mean, these are price inputs.
Well, that's why precisely the stocks are down.
If you have been curious how to make the money when markets fall, please visit marketcrash.money and get some additional information. Specifically, I have compiled some interesting reasons why stock market crash 2010 is a definite possibility, why we could be going for another Bitcoin crash, and more importantly, how to not let the market crash or the Bitcoin crash take advantage of you. Find out how to profit. If you're a new trader or an experienced trader, but you're looking for new ideas, new ways, how to take advantage of the market fall, because quite honestly, markets do fall much, much faster than they go up. So it represents, for a trader, a great opportunity to profit on the opposite direction of the market in a much shorter time frame and oftentimes maximize much bigger returns. So if interested in knowing the ways how I trade weekly options for huge profits as much as 3,800% to 5,000% on certain days, get in touch with me. Visit this link right here, How to Profit, read some information, and schedule your consultation. I'll be glad to help out and get somebody on the right track and show you some of my profitable ideas and share some experience which I've accumulated over the last 30 years trading weekly options. Thanks for watching. I hope this was helpful. We'll see you soon.